Good morning, afternoon, and evening, traders from around the world. I hope you all had a fantastic week so far in week 49, and you're ready to rock and roll into week 50. First thing, as always, we want to take a look at a couple things going on this week to make sure that we're not surprised by anything. News, of course, being the first, and one really obvious thing. There's no big news. None. It's all small and medium. So with really, really mild news this week and knowing that we're going into December, this is kind of the last really big kind of last 2 weeks of the month before things sort of die off. This is really the first big full trading week of the month. Next week, that's when traders start kind of ducking out a little bit. So we'll see. Monday morning, we've got consumer credit. That goes, or Monday afternoon rather, at 3 p.m. Consumer credit month over month. More small announcements on Tuesday at 6 a.m. and 8:30. On Wednesday, we've got some small announcements at 10 o'clock, 10:30. Although they consider crude oil to be a small announcement, I consider to be very large, or at least lately medium. So crude oil inventories, obviously, on Wednesdays at 10:30. And then also at 1:01 p.m., we have the 10-year bond auction. Ooh. On Thursday, we've got some medium news announcements. Hey, the first ones of the week, CPI at 8:30, the core CPI, and unemployment claims. And then it goes back down to small news announcements with natural gas storage at 10:30, 30-year bond auctions, and federal budget balances in the afternoon. On Friday, we have our next batch of medium news announcements at 8:30, the core PPI and the PPI. Both of those coming out at 8:30. At 10 o'clock, the prelim U of M consumer sentiment. But that's it. No big news at all going on this week, and that makes it kind of all up to price action, right? It's all up to the traders and what they want to do because, well, there's nothing else really as far as a catalyst to push things around on the news calendar. Now, as far as unscheduled news, that's always up in the air, and that can definitely get things going. But as far as scheduled news goes, it's really quiet. First up on the list is going to be the NASDAQ, of course, and with the overall movement going on so far, it's very, very quiet. The 4-hour chart has dojis all over the place. It is a mess, not really doing much of anything. Doesn't exactly give me high hopes for this week, but we'll see, because one big thing that does give me a lot of high hopes is this pinch point that's coming together. We've got the top of the larger wedge, and then we have the bottom of the rising channel. It's creating this really high tension zone of interest where if it wants to break out, we've got really good chance to get some good follow through on a breakout move, whether it's up, down, whatever. It's got kind of the zone of interest. Obviously, we're at the highs of a wedge, so it would be nice to see it break down rather than up. It would make more sense at least. But the market's pinching one way or the other, and with all of this consolidation going on and a pinch point coming together, this week could still fire off to be pretty interesting, especially if we can start cracking to the downside and get back down towards those wedge lows. Switching gears over to the S&P, we have some good bullish continuation and kind of a funky little inside nested channel still going on, rising its way to the upside. It's not the prettiest looking thing in the world, but it's obviously there. The big thing with the S&P is that it formed this just absolutely gorgeous wedge and broke out of very, very nicely. And not only was it just a perfect breakout, but also a breakout pullback, and that pullback was a 3-press megaphone bottom. Man, talk about perfect. Right back into the lows of rising support, everything lining up for the bulls to try to keep this going higher. This is very obviously running out of steam up here, and with all of this kind of tension and coiled up spring on the S&P, along with seeing the same thing, knowing that we're at the top of the wedge, it would make a lot of sense to see this want to snap one way or the other and kind of get out of this zone. So the S&P is gearing up to be a pretty nice area of interest and maybe looking a bit top heavy. That most recent bear bar is vicious, but with the smallest price action has been in terms of overall movement and volatility, I would rather wait to see if we can get a quick flush down to support or a rip back up to resistance or something that's just not stuck smack in the middle. Over on gold, we can see that they're kind of dealing with the earlier bottom to top wedge movement that we've been seeing before, even after that breakout move. So the original wedge bottom was sort of created across these lows, coming into play there and there. And when the market started correcting back up after that gigantic dump lower, the big zone of resistance obviously being at the highs, it couldn't even make it back more than, what, maybe 30, 35%, and then rolled back over pretty aggressively with probably one of the best flags that I've seen in a while, aside from maybe that one, a little bit rustier there. But with this breakdown movement, we had a huge blow off on the lows of the wedge, and with the lows of the wedge and that wedge being a bear wedge, you have a bear structure that's trying to break lower. That's very difficult to maintain, and it requires a lot of cash flow to keep it going down like that, or I guess in the downside's case, a lot of fear. Either way, it wasn't enough, and the market rolled all the way right back up to a big, strong rotation higher, where we're seeing some good continuation up. We are running into the kind of the bottom edge or a retest of the top of that falling wedge, and it's fairly obvious there's some resistance here, but the market's not doing anything other than going sideways. We're not seeing it pull back. We're not seeing it do anything but go sideways here, and that's a great sign for accumulation, and this is also creating a nice little pinch point. So if we can get a breakout move to the upside, that would look even better. Maybe back up towards those 1900s to try to finish ground up there. And then who knows, maybe we can get a rally back up towards the 1970s to see what they want to do up there. Then next we've got crude oil, which is forming a very nice spike and channel to the upside. But unfortunately for crude, maybe, right, it hasn't proven anything yet, but maybe, buyers attempted to get this breakout to the upside and so far fell flat on their face. That's not a good thing. Now, the sellers haven't taken over. We haven't seen them break down enough to really shake the buyers' confidence, but if the buyers start losing ground underneath the bull bar, underneath those major swing lows, it wouldn't be a surprise at all to see it rotate back down towards rising channel support. If the buyers can hold up here, then we've got a really nice breakout point to try to continue back up, maybe to the top of the channel, right? And then we can see all the way up back towards those $49 area. It depends on when it gets up there, 48, 49s. But overall, I mean, it's moving really, really well. The big dependent factor is whether or not the buyers can maintain strength here. We saw the last time this zone was a huge area of resistance. Now that it's broken above, it might have to ping off of it a few times to be used as support. Sideways, in this case, is a lot better than pullback. If it goes sideways to the bottom of the channel, that just shows even more signs of consolidation and accumulation. But if it pulls back a little bit, maybe a washout might be okay, but if it just slowly, gradually grinds its way back down, I would be a bit concerned that it might be losing ground too much underneath 46s, 45s, and then we see that zone as a resistance level again. Well, it seems like the euro has finally found a bit of a lid on its rocket ship meteoric blast off into space. This move to the upside is very, very aggressive, obviously. The euro's been screaming higher after it broke above 1.2. That was another big face melter of a rally higher. And now we've got a bit more consolidation because, guess what? We're coming to the top of the channel. A lot of profit taking is going on up here. And it wouldn't be a surprise at all to see the market begin to start transitioning into a little bit of a different view. Not so aggressive, but more so kind of sideways. You can see the potential for a spike in channel forming up here, fairly obvious. Now, if it does want to form a nice little spike in channel, then a breakout point and a breakout pullback, that would line up really well with a retest of that 1.2 to 205 area. And depending on how long it takes, it would be even nicer over here at the base of the channel too. So everything is kind of setting up to be interesting. It's way, way too high for me to want to do anything up here. But if we can get a bit of a pullback, you could very obviously see zones of support where buyers are trying to pick it back up and shove the market back up to the, back up to the highs and see if they can keep this this freight train of a move going. Feels almost unstoppable, and that might be the buyer's problem because if they hold on too long, then they become bag holders and you start seeing the squeeze back down. And then finally over to Bitcoin, which is a picture-perfect wedge breakout attempt so far. And the only reason I say attempt is because we have the first bull bar break of the wedge top, but we don't have any confirmation. We don't have any proof. We don't have any follow-through. None of that. We just have one candle closing, big, strong, tall, and proud outside of it. But nothing else. We need a bit more context, a bit more confirmation as proof, so that way we know what's going on with this breakout. Is it just a false break, or are they going to get this rally to the upside? If you guys were watching in the monthly brief, we're talking about how this could potentially be gearing up for a massive rally to the upside. And given this wedge, and it's holding so nicely with higher lows coming into the top, notice where all of this is kind of hovering inside of this big giant wicky top and bottom. It hasn't really gone anywhere inside of that. So if we can start breaking out to the upside, that 20,000 mark, that could be the launching pad. But if it wants to pull back first, don't be surprised to see big failures underneath the 18,500s. That seems to be where all of the buyers are hanging out. Now, the problem for those buyers is if the sellers gain too much ground and they start shoving back down towards like the 18,000s, there's nothing to really catch them until 17,500s, 17,250s. And then if that breaks, then there's nothing really until 16,500s. And then if that breaks, there's nothing really to hold until 15,500s. You can see those $1,000 drops between each one of these. And that's where things get a little bit vicious. So buyers do definitely want to try to hold it up here to see if they can get that continuation and then that big blow off on the high. All right, well, that's going to do it for week 50 analysis. That's 12/7 to 12/12. So like we always say, stay safe out there, keep those stops in play, and let those winners run. I hope you have a fantastic week ahead of you. And as always, we'll see you next week. Thanks.